Hi, folks. Thank you for joining in to our webinar this afternoon or this morning, depending on where you're located. We'll begin in just a few minutes. So thank you for your patience. Again, thank you for joining today's webinar. We'll begin in just a few minutes. Hi, and thank you again for joining today's webinar. We're going to give it about another minute or so to allow a few folks to join in. Thank you for your patience. We are going to give it about another 30 seconds and then we'll get started. Okay, why don't we get started? Hi, everybody. My name is Matt Scudero. I'm with the Credit Research Foundation. Thank you for joining our August virtual forum. It is absolutely wonderful to have you with us. We have a topic here I know you're going to enjoy. The topic is moving towards digital transformation in accounts receivable. We are very thankful to have the Serrala organization with us to present the topic. We have a couple of folks that I'd like to introduce for you quickly. Some of them you may know already, and then some may be new to you. First of all, we have Michael Kohler, and then we also have Daniel Protaska, and we have Christine Monk. So let me just give you a little bit about how today's session will go and a little bit of background for each of these individuals. First of all, Michael Kohler is a principal solutions architect with Serrala. He has both practical experience as a practitioner in the field and also brings with him over 10 years of experience working in order to cash, as well as consulting with other firms and organizations on implementation. Daniel Protaska is also an individual that has practical experience in the order to cash field, and is also with Serrala as Director of Solution Architects in the Americas. And the third individual playing a supporting role is Christine Monk. Christine is going to moderate today's session with Michael and Danielle. And a little bit about today's session. The pandemic has created a lot of change in today's marketplace. And with that, today we're going to talk about how technology supports your business from a continuity standpoint, from a process improvement standpoint, as well as some document and cost management concepts that you can bring back to your organization to better your operation. I also want to mention that Serrala is a platinum partner of CRF. We are extremely grateful for all that they do for CRF as well as for our discipline, and also mention how lucky we are to have them with us today in our endeavor for our August virtual forum. So with that, a couple of quick housekeeping pieces. Today is a panel discussion. So with that, you'll have a lot of concepts presented without a large deck. So be prepared to take some notes. Also, if you do have any questions, we'd love to have questions come in and create a dialogue, an active dialogue. So please use either the chat function or the question function, the Q&A function. You can submit those to us. And last, today's session is being recorded, so we'll be able to go back to it. So if you miss something, don't worry about that. You'll be able to go back to it, create those and get those concepts and the dialogue that has taken place. So with that, I'm going to pass it off to the Serrala team. And again, thank you very much for all of your support.
Thank you very much, Matt. That's great. And before we begin, I'll let you know a little bit about Serrala. Serrala is a B2B leading fintech creating more secure global payments capabilities for every enterprise. We provide unparalleled end-to-end solutions and services for inbound and outbound payments, and we serve over 2,700 customers globally from our 13 offices, and about 25% of the Fortune Global 100 companies are our customers. Today we'll be talking about our order-to-cash solutions, but we have a wide range of solutions throughout the finance area, from procure-to-pay, payment management, treasury and cash visibility, and the underlying data and document management that supports those functions. So I guess we can get started. And to start off today's discussion, we wanted to review some of the research that Serrala has recently done post-pandemic. We wanted to ask finance and treasury leaders throughout the world, really. It was Europe and North America for the majority, what they thought their perspective for the future was in 2021, and what were their digital transformation challenges. So we have some of the data here today. So we asked our customers, what obstacles do you face with digital transformation? We found that about 54% were having trouble changing existing processes. I'm sure we're going to find that to be a very common problem across the CRF community. 41% cited a lack of insufficient budget, basically. And 32% had a lack of clear digital business strategy. So I'm sure Michael and Daniel will delve more into those topics a little bit later. We also asked AR leaders specifically, what are your greatest accounts receivable challenges after the pandemic? So 41% that said that they were challenged by complex or manual capture of their payment formats. 35% reported slow or delayed cash application, and 30% reported late payments or payment defaults. I know we had talked with CRF and Matt earlier in 2020 about the differences that they had seen in the CRF community about payment rates and things. So that'll be an interesting topic for today's discussion. And then finally, what are their priorities for the future of finance? And that's really where we like to think. I mean, obviously, we're all still struggling throughout the world to get over the restrictions caused by COVID, but we need to think about the future of finance and how we can adjust to this transformed work environment that we are currently in. So what we found from our survey, 131 people surveyed, was that the top 3 priorities were 66% found they needed real-time data and analytics. That was particularly interesting as everybody moved to remote work, and they had a lot of paper-based processes or Excel-based reports that they were dealing with. Maybe they didn't have all of their data integrated, so that was really a challenge for people to be able to get the information they needed quickly to respond to such rapidly changing market conditions. 60% needed a reduction of manual tasks. In finance, unfortunately, that tends to be a huge problem still. We haven't fully digitized yet, but we're ready for the future of finance. And certainly, everybody working remotely has really accelerated digitization across the finance department, whether in order to cash, procure to pay, or other areas. And then 55% are looking at intelligent process automation. I think people are realizing that technology has come a long way and that they can do a lot more with what they've done with automation to make things faster, more accurate, more transparent across a global organization, especially when everyone's working remotely. And really, at the same time, we see about outsourcing is on the out and out there, with less than 10% considering an essential component of their future finance organization. So with that data out of the way, let's get started and have a discussion about digitization and the AR process. So welcome, Daniel, Michael. It's so nice to see you, even virtually. Great. So our first question will be for Michael. And since we want to talk about AR in the context of digital transformation, what do you see from our customers and from the people that you're talking with is happening in the world of AR automation right now?
That's a really interesting question, Christine. I personally, and obviously my colleagues as well, we have noticed a shift from last year to this year. Last year, and many of you will remember this, where we found like from many organizations, obviously with adjusting to like the COVID normal or whatever you want to call it, it was back to the basics. Right, doing the basics good, getting basically your house in order, your ducks in a row, and all that, fancy stuff that we've been talking about for years, like machine learning, AI, and all that, was pushed more into the background because obviously it wasn't the time to prioritize that because you needed to adjust to a new environment, right? So, I mean, for many organizations, that is, right, that were most affected by whatever was happening in terms of COVID stuff. This year, interestingly, as like we are all, like both professionally and personally, trying to get settled into a pre/post/during pandemic life, we see a lot more interest being geared up toward AI and machine learning again, and like newer technologies, and like how can we be smarter, because it seems like a lot of organizations have found their basic territory covered and solidified, and so they're ready to implement, also to take it to the next level, basically, and to see how can we deploy new technologies and reduce costs. And like many organizations, they're still under a lot of pressure to either make up for lost revenue last year or cut further costs and all that. So that's definitely, again, on the agenda for a lot of organizations. And another trend that we found also both this year and last year, like the focus has shifted like toward the bigger picture, right? So it seems like finance organizations are taking a more holistic view, not of like specific processes like, hey, how can we do credit risk assessment better? Well, that's always, a good question to ask. But like what we've seen is organizations saying like, how can we actually optimize our end-to-end process in order to cash, right? And even like tie it in with treasury and get like more cash forecasting, cash visibility, right? So it seems like especially the pandemic seems to have like pushed people and finance leaders to take a more holistic approach toward optimization in order to cash.
And Daniel, you'd agree? You see similar things?
Yeah, definitely. I think machine learning and artificial intelligence, I think one of the things that we do a lot is really demonstrate our solutions to prospects, many times to customers as well. So that's always the question, like what are your capabilities in terms of machine learning, artificial intelligence? So that's definitely the big topic at the moment. I also agree with Michael in terms of they are not looking to automate a specific process anymore. So it's really end-to-end. And not only end-to-end when we talk about order to cash, but even when we look at only one sub-process, for example, cash application, the end-to-end within cash application, it's much wider than just applying cash. We are talking about bank connectivity. We are talking about connectivity to payment service providers, to capture settlement files, to capture remittance advices, capture remittance advices from customer portals or from an email inbox. So they are looking for really like a full automation in the entire processes, as Michael well said in the beginning. The other point that I would like to point out, it's from a market perspective. I think what has been changing a lot in the last 2 years is that companies are pushing more and more their customers to pay with electronic payments, right? So we see a huge decrease in the utilization of checks and also money, right? So one thing, so I'm currently based in Europe, in Hamburg, and when I go to like the supermarket where you have the option to do the self-checkout, different from the US, if you go in a Target that you can pay with cash in this self-checkout, here you no longer can pay with cash. So some stores, they have like 8 tilts where you can only pay with credit or debit card or electronic payment. So you don't have the option to pay with money anymore. So this has everything to do with also with AR automation. So everything is linked in the end. But it's really good to see how things are going now that we are probably post-pandemic.
Yeah, hopefully, for sure.
Yeah.
Anecdotally, I had to get my kids bank cards because they can't carry cash and pay cash at the school cafeteria anymore. So there you go. There's just a human level. All right. So continuing on with our second question then, Daniel, back to you. So why do you see the significance of AR automation increasing? Obviously, the pandemic's had some influence on that, pushing everybody virtual when we weren't expecting to be. But what other reasons do you see?
Yeah, I think in the result of the research, right? So they are seeing that they have late payments issues, delayed cash application, difficulties to capture invoices, to capture remittance advices and bank statements. So I think what is happening now is that leadership realized that AR is a key process within finance, right? Because it's all about the cash coming in. So if you don't put priority for the cash that is coming in, you might be doing something wrong, right? So I remember that, so I'm a former global process owner, and I remember that sometimes I would have these budget discussions with all the different finance teams in the company that we would, like to get some funding for our projects. And at least at that time, like 10 years ago, I always felt that like AP, accounting, they always had like a preference. I might be wrong, but
I'll tell you from the P2P side, we feel that differently, but
yeah, maybe that's. But in the end, I think that's exactly what it is. So leadership is really putting focus on, okay, how can we improve our processes to bring cash faster? Because the other thing, when we speak about delayed cash application as well, you have two bad consequences, right? So the first one is that you might be blocking incoming purchases from your customers, absolutely, because you're not, updating the credit limits. But also you might be giving a call to the customer saying, hey, are you going to pay this? And they said, well, I paid you 2 days ago. Like, what the hell's going on, right? So I think they understand that the importance, and that accounts receivable in the end, there's a lot to do with customer experience as well. So
yeah, that's an excellent point. And Michael, do you have any thoughts to share on this topic as well?
Yeah, and adding to that, the pandemic obviously has sent most people working from home last year. And interestingly enough, and we've been hearing this also among the CRF community, many prefer to stay at least in a hybrid model of working, like just a few days in the office and a few days from home, right? I mean, Serrala has always been an organization where, some, or if not even most of us, have enjoyed working from home, and it seems like that is becoming the new normal also for other organizations that formerly used to require an on-site and in-office presence, or, they ease more into a model where they allow their employees, well, we've seen that, working from home, works and we can get everything done. So why not give our employees the flexibility to keep working from home at least some of their time? And that obviously increases the need for, better collaboration tools, because otherwise, how can you exchange information, and going more digital, obviously, because you all need access to the same information being in different places.
Absolutely. That's a good point. Yeah. Okay, moving on to question 3. So Daniel, this one's for you. How were low automation and other process flaws amplified by the pandemic? And how did COVID impact digital transformation? So.
Yeah, that's a very good question. And so I think that, long story short, companies which were inefficient with their AR processes, they were hit really hard. But and the way that I like to see is that if we just look at order to cash, right? It's a mix of, I always like to see the 3 pillars. So you have people, you have process, you have technology. So if you don't have the right people, and then COVID comes, and then you move all, everybody working from home, that's a disaster, right? Then in the same side, if your processes are not efficient when everybody's at the office in the same location, where in theory, it should help communication and everything, then everybody's again working from home, your processes are going to become even less efficient. So, and the same thing with IT infrastructure, right? So a lot of companies, they had to be really quick to upgrade their infrastructure, so that could allow them to, all these employees to work from home, so far and so on. So I think it hit them really hard, and a lot of companies, they were able to quickly react and organize things in a way that didn't cause any business disruption. Now, in the other side, companies who were successful in these three pillars, like people, process, and technology, they probably in a couple of weeks, it was just like normal. So nothing changed. So in the end, I think it took some time for a lot of companies to realize that it's not a matter of looking at just one pillar, but they really need to look at all of them.
Holistic view.
Yeah,
just anecdotally on that note, we had a number of customers over the pandemic who had taken an existing process and outsourced it to firms in other locations, which in some ways mitigates risk, right? If your own office is jeopardized, your outsourcing partner can help you get beyond. But in a global pandemic, everybody had to start working from home, and that caused a huge trouble for businesses who weren't able to process the payments that were coming in, or on the P2P side, the payments going out. And so they really had to scramble. And so that's where it really makes you think about, do the process and the technology and the people all work together efficiently? Michael, do you have any thoughts or examples of things that you can share from the field?
Yeah, well, I was just thinking, like, on the plus side, the process flaws that were, laid bare by the pandemic, or even amplified by the pandemic, that led in many organizations to the positive consequence that finance leaders, or the executive team, was more willing to provide funding for, technology to help improve those processes, right? So, I mean, yes, on the one hand, because I think every company that we talk to, they always go, like, when we go and do the discovery, they're always like, oh yeah, our processes are really bad and we need to improve and all that. But it's really, don't focus on that, because then you just get stuck in kind of, negative attitude, right?
Yeah.
So take this as, okay, this is what it is, and where can we go from there, right? And this is, I mean, a positive, side effect from the pandemic. It just identified certain issues that were there and brought it. It was big enough to bring it to the attention to the people in the organization that had the power to do something about it, and to provide funding for it, right?
That's interesting, because in that same survey that we cited earlier, people had an overwhelmingly positive view of the future of finance. They said, we think this year's going to be great. And possibly that's why, right? Because they finally had identified some key reasons. They had the attention they needed. They know that they're going to get the help that they need going forward. So that's kind of very interesting. All right, moving on then. Okay, so let me see, we're on question 4. Michael, when it comes to business continuity and process improvements, how relevant is automation in covering an end-to-end process? I think automation is only a little part of it, right? The process is bigger than just the technology or the automation, but maybe I'm wrong.
Yeah, I think, well, no, you're a hunch there. And we're going to talk about process further down the line, right? This is really where, I'm getting really passionate about. But in terms of looking at the end-to-end process, right? How relevant is it to improving the process and business continuity? Since, I mean, and it works with any other business process, right? Not just in finance, not just in order to cash. Any other business process is, you need to step away to see the big picture, because the problems or challenges you have in one area might be caused by another area, or might be impacting another area, right? So it's like this kind of no man is an island thing, where everything's kind of interlocked and interconnected with each other. And actually, we've seen this on many of the projects that we've done with our customers, especially on the AR side. Cash application versus collection. And this is why I really appreciated the outcome of our finance survey, because obviously the leaders that responded to that survey had done their homework. Because it was really interesting to see that almost half said the biggest challenge was dealing with delayed cash application and complex payment formats that were manual, that weren't, captured automatically. That led to delayed cash application, and only about a third said they were struggling with late payments from their customers. Because really what it is many times is you look at your aging and you're like, why is my aging so high? I've got like that much like past due that can be, and many but some of it might be due to like delayed cash application, because the customer is paid, but like really the AR hasn't been closed yet because the cash team is just trying to play catch up with what the customer paid. And especially in industries where companies might be dealing with customers that have themselves not really fully digitized and do not provide enough information, or the information they provide in remittances or payment information isn't, can't be automated or captured automatically and all that. So there's a whole thing behind it, right? And as Daniel said, and then, the collection team goes out and makes phone calls to customers, or you might be sending like statements or reminder letters automatically out to customers, and the customer says like, I don't think so. I paid you, right?
Yeah.
So it's like really identify, if you take a bigger look at the holistic process, you can easily identify where the actual problem is and tackle that first, and then see if that has a positive knock-on effect to other like sub-processes where you thought the problem was, but it wasn't really there. That makes sense.
And Daniel, you seem like you're in agreement.
Yeah, definitely. And I think root cause analysis is always a good exercise, right? So a lot of times, of course, we offer solutions to help our customers to manage their deductions in a better way. But of course, that the best process or the best situation is when you don't have deductions at all. Right. So if you have deductions, like 80% of your deductions are because of damaged products, like there's something wrong that you need to fix with the transportation of your goods, right? So I think this is something important. And in the end, I think when companies, they look for end-to-end solutions to cover the end-to-end process, they're also trying to get visibility, right? So visibility through KPIs or reporting, which can help them to identify the root cause of these problems.
In your previous job, were there things that you relied on to help do that, the KPIs that you found the most important that way to do that root cause analysis, to find those little butterfly effect type problems that were in your processes? Yeah, definitely.
So in the cash application side, automation rate is one of the most important KPIs, if not the most important. So depending on the solution that you're using, you just have either you don't have visibility about the automation rate, or you have just the overall automation rate. So when you have a solution which can provide the automation rate per bank account, or per business partner, that makes a big difference.
Right. So you can pinpoint. Yeah.
Exactly. So you can see that maybe with a bank, you have a better automation than the other. So it might be something wrong with the bank statement that you're processing from that specific bank. So I think it's all about the visibility. And in the end, when you implement a solution which covers the end-to-end process, it brings a lot of visibility. And this helps a lot all these companies.
That's a great example. Thanks for sharing. That's great. So Michael, we're going to continue. So are you seeing roles changing as well? So we're talking about automation, but what are the building blocks of automation, generally speaking, I guess? That is
Oh, wow, the building blocks. Okay.
I know, yeah, that was a question.
Yeah, I mean, there's a lot of things that obviously you need to consider, right? I mean, automation, obviously, and we've always said that, right? Automation where it makes sense. You can't just like go ahead and like automate just anything just because, the technology is there. You need to first look at your own business. And, and this is also interesting, every customer of ours has always said like, oh, we're so different from the rest of your customers. Yeah. And I mean, I get what they're trying to say, right? So it's like there is certain uniqueness to every company that you just really need to take into account, and you know, before you put into process any kind of, I don't know, automation or technology in general, is like take a look at that uniqueness and see, like, you know, is this justified, or like, is this might there be a change management issue or whatnot, right? So that's always a good thing to do. And then really, you know, when we talk about automation, I mean, automation cannot happen without standardization, right? And this is, again, we're covering process territory here, where you really need to take a hard look at your processes first. Right, so you cannot automate or improve something with a tool if you do not have an existing or good existing process. Right, so it's just like any endeavor or project in that direction will just fail if you just think like, I'm gonna deploy some technology, you know, that will help optimize my non-existent process. So that is really, really important. And we see that happening sometimes, unfortunately, where, you know, I mean, due to different reasons, and also, you know, growing pains of companies, you know, you have mergers, acquisitions, and other stuff where, exactly. So, you know, that process side of things gets often overlooked. And it's really important to see that as a building block also of automation, right? So get your processes in order, and see, you know, where can we apply a level of standardization that can lead to automation, for example. And also the data, like, you know, how accurate is your data that you have in your systems or system, you know, you're working with one or multiple. That is also important. I mean, we've seen that, you know, one of the top priorities cited by the participants of our survey was having real-time data and analytics. And obviously that is not just to provide visibility, but also if you automate a process, the underlying data, if the underlying data is not good, then, you know, the outcome obviously will also not be good. So for example, on the Cash App side, you know, if you have, and this has actually happened in one of our recent projects where, you know, in some industries, customers sent debit notes to their suppliers saying like, hey, these are the deductions that I'm taking, or, you know, because of, you know, quality, like damaged goods, or like, you know, we order 10 boxes, you only delivered 8. So there are some companies still, especially smaller companies, that, you know, take the supplier invoice, they do handwritten annotations on what they're deducting and send that back to the supplier. Now, well, try and automate that with, you know, OCR tools. It's, you know,
not gonna work.
kind of difficult,
Yeah.
right? Exactly. So it's kind of like you need to also look not just at your processes, but also the data that you're using to automate certain processes, right? And see, can we get that data in a cleaner form that allows us to automate that, for example. And just one small example.
Or make small, like Daniel's earlier example with the bank statement. Maybe it's just about collecting certain additional fields that you need about the bank or the bank statement that could help the process. But Daniel, maybe you have other thoughts on how that works or what we can do for building blocks.
Yeah, no, actually, I just want to mention something more towards the people and the actual role of people working with order to cash. So I think when I look at order to cash as a whole, my expertise is really cash application. I'll leave credit and disputes and collections with Michael. He's the expert on that area. But like cash application is highly operational, right? So a lot of companies, as we could see the results of the survey, like 60% is looking for reduction of manual tasks, right? And that's not only because it's good for the company, but also people cannot stand doing operational work anymore.
Right, just simple matching, right?
Yeah, it's just boring and it doesn't add value to you as a person. You don't develop. Like you can do that for 6 months, 1 year, but after some time, I mean, you need to find something, right? Something else to keep growing. So I think what happens is there's a shift, right? Where companies are looking more for soft skills than hard skills. People who is good with communication, problem solving, teamwork, time management, you know, because in the end, it's all about relationship with their customers. right? And you don't need any of those to simply link an invoice of 1,000 with a payment of 1,000.
Sure.
Right, so I think it's been changing, and I think AI, machine learning will really continue to make these changes in highly operational tasks.
That's a great point. Matt, you have a question from the audience.
We do, Christine, and yeah, an interesting question, right? As you talk about automation and hit those three pillars about people, process, and technology. One of the very typical questions that a company will ask is, what's the return? So the question is, what is the average ROI for a credit finance automation project? And I know it's a broad question, but I think that the view of CFOs is slightly different today than it probably was 2 years ago, and what that ROI may be. And I don't know if you have any recent data points or thoughts on that that you could share with the audience.
Well, from my perspective, I think the ROI, when it comes to the implementation of an entire order-to-cash suite, I think the ROI can be as little as 1 year, depending on the current level of automation that this company currently has, depending on the structure, the business model, and other things. So it's really, in some cases, it's just a no-brainer. Like you know, companies don't realize why they took so long to take a decision to improve their processes and implement a new solution. But of course, that it varies case by case. And as I said, depending on the current automation rate that these companies have for their processes. But yeah, it could be as little as 1 year.
Good.
And also, one other thought is, like, what information do you take into account when calculating the ROI, right?
Yeah.
Is it
strictly
just
automation?
really like hard savings, like how many, like, you know, nobody wants to hear that, but like how many FTEs can we cut or save or redeploy or whatever you want to call it, right? Or is it also like, you know, taking inventory of like, what is my biggest current problem in AR and like, what is it costing me? Because like, there's one thing, like, yes, there is, you know, automation of manual tasks, but I mean, do I have a, you know, blown up DSO because like my collectors don't have visibility into what they have to collect? You know, do I have certain things that my customers do that are really hurting my DSO, and I can hopefully try and get a certain change in that? I mean, it is true, you know, changing customer behavior is never easy, but like out of, I don't know, 100 customers, 20 might change, and their behavior in terms of like payments and how they send payments and what they provide as in terms of information, and that can make a big impact, right? Look at your bad debt write-off and do root cause analysis for that. So it's kind of like, do you really look only at kind of the hard savings in terms of FTEs, or are there other like, you know, financial leaks in your processes that you can stop, and where you can also get more benefit from that, right?
Yeah. And also, I think in some situations, companies which are looking to have like a big expansion or acquiring another company, right? So that's where sometimes that's the right timing to implement a solution like this, because it can prevent you from having to hire like more and more people so they can, do all the job that it's gonna be crazy after the increase in sales. I think one of our customers, they were able to increase. So I think that's something important, because a lot of the customers and prospects that we speak about, many times they're not looking at FTE reduction, right? They're really looking for more transparency. They're looking for more visibility around their processes and process efficiencies. Right. So a lot of companies, they do look for soft benefits as well. So it's not only about the ROI, the hard benefits.
I want to add one piece onto it, and that is maybe just a slightly different thought track on ROI. And what we found through the pandemic is it was not necessarily a matter of what was the return, but it was a matter of, can I afford to not do this? Given the pandemic, cash flow being the primary driver behind that. given that folks are remote, not necessarily. I think Daniel, you made the references, not in an office, using paper checks, etc. So it was about can I not afford to do this? So it was a yes no versus an ROI in many cases, and we still find that today through our research. The investment dollar is still moving pretty quickly into this space, into the order to cash and the P2P space, because it's a matter of I must versus is it a nice to have.
Well, and so much of what we've seen in our research too is just the scalability. So many of our customers, especially post-pandemic, are adjusting to this rebuild stage, and maybe they've acquired new companies, maybe they've divested companies. They need to be able to scale rapidly, and doing something without digital transformation, without automated processes, they can't possibly bring on new businesses. They can't possibly handle the transaction load. Even if people have to take sick leave or are locked out of an office for a while or unable to work, they need that flexibility that the digital transformation, that's a tough word to say sometimes, gives them to be able to, they have to do it to run their business. Basically, it's kind of a new perspective on why we're doing that.
It was a great question. And just remind folks, if you want to submit questions, please through the Q&A box or the chat box. I'd love to have those and create a dialogue.
And then another thing I just wanted to add here, because it ties into the bigger process picture and cost management and all that, is, and we've heard this actually from many of our companies that, or customers that are global companies that work with, offshore locations where they have certain kind of, shared service centers in where regions or places where the cost of labor isn't that high. So, we haven't been hearing that so much since the pandemic for a specific reason, obviously, but pre-pandemic, it was always like, well, yeah, automation is good, but if I look at the hard ROI, like buying a tool versus having a team sitting somewhere where I pay pennies on the dollar for a person doing it manually, I just don't see the need for it, right? But and then that was obviously more coming from higher level executives that just look at the numbers, right? But not what is really behind the numbers, because when you actually talk to the people, that are doing the work, and even collections and credit leaders and directors, they're like, yeah, this is all good, but the cost that nobody calculates is, okay, training, even, and it doesn't matter where a person sits, a new person always has to be trained, onboarding, training, right? Then, if they go on sick leave or something happens, replacing, even if it's just a temporary replacement. So there's all that, hidden costs that nobody really saw before the pandemic or wanted to see, that comes with, manual work, even though it's not expensive, quote unquote, but with the pandemic, obviously, and as you said before, Christine, a global pandemic, it affected every region at one stage or another. So while probably we all had to work remotely, maybe in our offshore locations, people could still go to the office. But that obviously, as the pandemic rolled through the whole planet, changed, right? So now all of a sudden it's well, for us here, it's, normal. We take our laptop home and work from home, right? And in other locations, you might have had to provide the infrastructure first to your employees to do that, right? So it's all that, hidden cost factors that we obviously encourage companies to take a look at when doing that whole ROI math, so as to do it right.
All right, absolutely. So this leads kind of into our process question, I guess, and Daniel, I guess, and maybe I mixed up the order of the questions, that Michael was the process, champion, I guess. But Daniel, if you want to start with this, then what's the importance from your perspective about the business process when it comes to the implementation of AR tools? I mean, I think you really spoke about the importance of the human factor in thinking about your processes. I think that's really fascinating. So maybe we can dive into that.
I would say that it's as important as people, right? And I can give you two examples, right? So again, I'll focus on cash application, right? So a lot of times we get the questions, can you automate the write-off for a deduction? Yes, the solution can automate a write-off for a deduction. But then companies, they have internal procedures, like standard operating procedures, where they say that if there's a difference, which is over $1, you have to justify. Then you just lost the automation, right? Because you have to justify. And a lot of times, these SOPs, these internal processes, they are old, they are not reviewed regularly, right? And in the end, they're going to impact the automation. The same thing happens with approvals. Like I was working not in AR, in a commercial department, and we had a specific situation where we need to get the approval from 5 different areas. Like, why do you need to get the approval from 5 different areas? Well, because it's in the standard operating procedure. So what's the thing that you need to do is you change the standard operating procedure, right? And the last one, also a real case. I was asked if the solution could apply cash without having information of the invoice, for example, right? And then the thing is, this company, they had an internal procedure which said that if you have one open item of 1,000 and you have one payment of 1,000, you have to get a confirmation from the customer that the customer is paying that invoice. Right. And again, so why? I mean, if it's one-to-one, so many times is the process who is driving inefficiencies in a solution that you might have in place. Right. So I'm a big advocate for whenever you are working in an implementation of a new solution, you have to review your processes, right? Because otherwise, chances that the solution will not deliver what you're expecting is quite high, right? So.
Right. You might move to a house with a bigger closet, but if you don't get rid of all that old stuff that you never use, it's still not going to be a big enough closet.
Yeah,
for your
exactly.
business. That's how I look at it. Michael, do you have thoughts to share on the process?
Yeah, and just to clarify, I think Daniel's the process champion because he used to be the global process owner for it.
That's true. That's true, Mike.
But I am very passionate about processes as well, obviously, because many times, and this is why obviously when you deploy technology, whatever it is, it's also a good time to review your process, as Daniel said. But even if you don't deploy the technology, you should probably be reviewing certain processes from time to time or on a regular basis. Because, I mean, some of the processes might be fully justified and still valid because there is some real good and valid reasoning behind it, because of the uniqueness of the company, because of the industry, because of compliance with regulations, etc. But then there's other processes that are just there, and it's just people are just used to it, and
they forgot.
It just comes down to change management, right? So that when talking about processes, obviously change management, we could fill I think half of the forum, probably an entire day, just talking about change management. But when it's in the name, right? The digital transformation. So change is inherent. If you want processes or things to be more efficient, more effective, if you are under pressure to deliver savings to your CFO, then change is inevitable, and it would be a good moment to take a look at is the process really doing that for me, what I wanted to do, and is it giving me the results that I want, right?
Yeah. So, Matt, hi.
Hi. Another question that came in, and this is great. It ties a lot of the pieces together, but it's about implementation. And the question is this: how effective do you find your implementation efforts to be with clients in a fully remote posture? So again, when we used to be in a 4-wall environment, we may have had groups or teams that operated at a central location. Now that we're all remote, how does that process work, and how effective is it?
Want to take that one, Michael? You're the former consultant.
Oh yeah, I have a lot of thoughts on that.
So
I mean, Serrala has always been an organization that did at least 80% of their implementation work remotely, right? So even pre-pandemic, we had a lot of experience with remote work, but there were certain things that we would always do in person, obviously, like workshops, right? So doing the discovery, the blueprint, and then the training, most importantly of all. Like, and when I was a consultant, I delivered like obviously many trainings, and I saw the real value of having that in person.
Mm-hmm.
So now with the pandemic last year, I talked to our consultants saying like, so tell me, how did the trainings go? Because I do not see like how we can do trainings like remotely online, right? It's just like, you know, training is such a vital part of every project, of every process. And amazingly, it went really well. The only thing that people had to do is kind of restructure the process or the format, right? So instead of doing like a 1 or 2 day workshop in person where you are in the room with the same people for 8 to 10 hours, our consulting department changed the structure or the format of the training to say like, okay, we're first of all going to cut the number of people that we allow in the training and do more sessions, but for a shorter period of time, because obviously the attention span of doing like online stuff is a lot lower than when you were in person, right? So just by doing these small adjustments, now we are also able to deliver projects like 100% remotely. Same with discovery and blueprinting sessions, right? So instead of having like one full 8-hour session, it's like broken down into smaller bite-sized pieces. And also doing it more for a targeted audience where you don't have to have 20 people in the room. And all of a sudden it works really well also in an online environment.
That's great. That's great. Daniel, any thoughts?
No, I fully agree with Michael. I think we have been able to deliver the entire implementation completely remotely. So, and as Michael said, we used to do that before already. So Serrala is a global company. So yeah, thankfully, we never had any major issues while delivering these solutions remotely. So
yeah, that's great. Matt, hi.
Hi, I think your dialogue created a number of questions here, and I like this
That's
one.
great.
As a small AR and finance department, how do we know if our standard operating procedures, SOPs, are industry standard and capable of being automated someday? So it's a really interesting question.
yes, that's a very good question. Well, I would say like in large corporations, usually you have two roles which always help to review processes, right? So you have global process owners who are mainly responsible for the overall process of a specific area or department. And you have also usually under the IT organization, they call a business relationship manager, right? So somebody who makes the bridge between IT and the specific area. So I think the key thing is really to have somebody who is expert in process review, root cause analysis to understand what kind of challenges you might be facing, and other tools like Six Sigma, Lean Sigma, which would help you to really design, go through a process design study or project. So I think that would be the best thing to do. Not sure, Michael, you have any? Yeah.
Well, I would just say, since CRF provides such a great community and platform, for networking, talk to your peers out there as well and gather some experience. And I mean, obviously Matt will confirm that 1,000% CRF provides all the necessary platforms for doing that, right? So I know, for example, that everybody's really excited about the October Forum, like being back in person, and you allowed more time for networking and sharing and peer exchange, right? So those are like stellar opportunities to just get that input.
Yeah, Michael, I couldn't have said it better. Thank you very much for that great commercial for Sierra. But as an example, we have our open forum for this session for the August forum on Thursday. If somebody does have a concept they want to present to their peer group, simply ask it, and the peer group will help them with that. What processes have they automated? What's worked well? What has not worked well? What solution sets have they used, et cetera? It's just a great opportunity for that peer-to-peer networking. So, Michael, I owe you a dinner at some point. And I'll turn my mic and video off at this point.
Yeah, certainly no replacement for in-person. While we can do virtual training, definitely in-person networking and training are also very beneficial. Definitely looking forward to getting back with that. But anyways, going back to digitization. So Daniel, we're wondering what you're seeing. We're coming to the end of our discussion today. So maybe where are we going to go with AI and ML going forward now? Where do you see the big push in the next little while?
Yeah, so I think just a personal interesting experience, right? So I like to watch agriculture news, which is something that is streamlined on Monday morning.
Interesting. Okay.
Right. So I log into to YouTube, and then I watch it. I always watch every Monday. The funny thing is that after watching this every Monday for 2 or 3 weeks in a row, every Monday that I open YouTube, exactly what I want to stream is there, right? And that happens only on Monday. So YouTube knows that it's a behavior. It's my behavior to go online, search for the agriculture news, and click play. Right. So I think what we are doing with machine learning and artificial intelligence in the accounts receivable space is pretty much the same. So it's analyzing customer behavior and the customer, then our customer, Serrala. So the solution analyzes the user behavior while applying cash, for instance. And then the solution is able to learn from that behavior and make adjustments based on that behavior. So I think from now on, this is just going to get better and better. And the end result is really that these highly operational and not so highly operational tasks, they tend to be automated more and more.
Well, and Michael, I'm sure behavior is a big influencer on credit and collections areas as well, or?
Absolutely. And I mean, those like AI, machine learning, they only have become buzzwords like pretty recently over the past 4 years or so. But I mean, solutions had always like certain AI capabilities in there. It was just, called out as being artificial intelligence, right? So it's not a new trend. That's what I'm trying to say, right? And with all the buzz around it, since it is translating into like more tangible results, and people can see what it does, and it's no longer something that we see that people are scared of. Because I remember talking even like 4 years ago at conferences with people, with credit managers specifically, and they're like, yeah, automation, even like automation, right? And I shared their concern because like it's scary to think like exactly. So because the thing is also like, yeah, you do all like, automation, the machine does everything for you, but if something goes wrong, who's held responsible? Not the machine, obviously, right? So the CFO or who not comes to your desk and says like, well, this is what happened. So it's kind of like, the fears were understandable, but like now that also, the technology world and, the provider community proved itself to companies out there that it is safe technology and it delivers a lot of benefit. It does not take away control from you when you need it. People are no longer so afraid of that kind of technology.
Okay, that's great. And so we're coming sort of to the top of the hour. So I'll just leave us maybe with the last question. I'll skip over the one about document management. Although if anyone has any questions, Michael and I wrote a great white paper. You can get it after this webinar. But anyway, so when looking at where we're coming from, a global pandemic, a recession, trade disruptions, etc. What is your outlook for the future of AR? Let's leave everybody on a positive note or something to think about. So Michael, do you want to go first maybe, since you're the...
I can't find my crystal ball at this moment. I don't know where it went. Because, like, I mean, there's a lot of things that could play into it, right? Sure. With, obviously we're not over COVID. We're riding one wave after another, but it's changing still with like vaccination and whatnot. So, like, I think one thing that we have learned is, we need to be more adaptable to change. So this is definitely
Yes,
that
I
I see
agree.
something for the future. Like, we are more ready for change. Organizations in general are more quicker to adapt to change, which is also great, when it comes to optimizing processes. So this is definitely something that will hopefully stay with us, and also will help drive the optimization and digital transformation of financial processes.
Yeah, and Daniel?
Yeah. So I, to be honest, I don't see like major changes in the next few years, if I may say, because the overall relationship between a company and their customers, they tend to be stable, and I'm expecting that it will continue that way. But now I do see, of course, trends of as I said before, right? Paper checks, money. This is definitely going away, and we might have new payment methods coming. So I do see, and this might change a little bit about how AR is. So for example, cryptocurrencies, right? We are not sure yet if this is going to be a way of companies exchanging money, but it's something that could happen. Not necessarily it's going to replace everything. So I think that, and again, paper checks, money, that's definitely going to go away sooner or later. And then new payment methods might come into place. It's just giving more options to not only businesses in their B2B relationships, but also to consumers.
That's great.
Yeah.
And Matt?
I just have a big thank you to say at the end here. But before we do that, a couple of things. There are so many takeaways for me, and I'll start with the three pillars that you had referenced: people, process, and technology. And when I think about where we were and where we are at today, that technology seems to be that wrapper around that four-wall environment that we were so used to and so comfortable with. And that technology now helps support the change that we need to deal with. And as we step back, a lot of what you had talked about was change, and I see the discipline changing rapidly. And looking at the big picture is so important. Today's credit professional has responsibility for many areas, not just a single area, and that's where we continue to see that movement. And again, as I step back, I think of technology as a risk mitigation tool. Just like we're trying to mitigate risk of our customers and collect those receivables, the risk mitigation that the technology provides is it allows us to do the process no matter what happens, whether it's another pandemic, another issue, or just a change in behavior. So we're at the top of the hour. I'm going to close it there. I'm going to say thank you to Serrala, thank you to our guest speakers, and thank you to all of our participants in joining in.
Absolutely. Thank you very much.
So great to have you with us. I hope everybody has a great day. Stay safe, stay healthy, and I think we are finishing right on time. Take care, folks. Enjoy your
Cheers.
day.
Bye.
Thank you all very much.
Thank you. Bye.
Thank you, guys. Bye-bye.
Bye-bye.